I am briefly going to talk about three topics here. Firstly, how money is made trading the futures market. And first, before you learn how to trade, you would have to understand what candlesticks are, or anatomy of candlesticks, and what they show you. And then lastly, based on the candlesticks here, we can come up with trading strategies or patterns that we see in the markets, which allows us to make a decision of when to buy or sell something at a specific point in time. When you're trading the futures market, what you're essentially doing is you're just trading price, right? So you're just trading the price of a certain thing, whether that be gold, silver, or let's just say Nasdaq, right? You can make money by buying something at a lower price and then selling it at a higher price, and you profit off that difference, right? Or you can sell something at a higher price and then buy it back at a lower price and still profit that difference there. Let's just say you bought something for $1 and then you sold it at the price of $101. You will profit $100 there. Or let's say you sold something for $101 and then you bought it back for $1, then you profit $100 there. Let's take a look at the anatomy of a candlestick. There's two main parts of a candlestick here, which would include the body. Most often you'll see one that is in or a green colored body, or one that is in a red colored body there. Second part of candlestick would be the wick, otherwise known as the shadow. You have a top wick usually, and then usually you also have a bottom wick or a shadow as well. Essentially, they call them candlesticks just because it does look like a candle here. So what does a candle tell us? Now, let's move on to this side over here. So candlestick just tells us where's price opening and where's price closing at, right? If you see a green candlestick, this would be considered as a bullish candlestick, meaning that price has opened right at this level here and then ended up at this level here. And then for bearish candlestick, price is opening up at somewhere that's higher and then ending up somewhere that's lower there, closing lower, right? If you take a look, here's a candlestick chart you could go on any time frame. Here's the 5-minute time frame. You go to the 15-minute, 30-minute, 1 hour. And then so essentially each candlestick will indicate how much price has moved and in what manner within that 5-minute, if you're looking at the 5-minute time frame. So each candle here, this green one here, resembles price that's moved this much in 5 minutes and so forth, right? Let's just say that, so for this red candle here, it's 8:15. So within 8:15, so for a bearish candle, meaning that price started up higher and then ended up closing lower here, right? So let's say if you take away the wicks, don't worry about the wicks right now. Let's just say at 8 o'clock, so let's say this is a 5-minute candle. At 8 o'clock, the price opened up at, let's just say $5, and then price opened at $5, and then at the end of that 5 minutes there, the price closed at whatever price, let's just say 15. This is a price. So it's considered a bullish candle just because the price opened at a lower amount at $5, and then at the end of the 5 minutes it closed at $15. And for a bearish candle here, let's just say that price opened up at, let's just say $25, and then closed at a lower price, whatever that is. Let's just say it could be $5, it could be $15, but anything that's lower than 25. This would be considered a bearish candle just because the candle ended up closing at a lower price than what it opened up at, right? And then with the candle wicks, you'll have a candle wick high and then a candle wick low. That just means that within the 5 minutes there, price can fluctuate past what the price closed and opened at, right? Let's just say this 5-minute candle was moving up and down here. Price pushed all the way down to, let's say, $1, Or for the top wick, let's say price pushed past $15 and then ended up wick high, let's just say it's anything higher than 15, let's just say $20, right? Then end up pushing back down, closing at 15. The same thing over for this bearish candle. Price opened up at 25, but the high of that price, whatever that wick was, higher than anything higher than 25, let's say $30 or 26, 27, and so on, right? And then for the candle wick low, any price that's below 15 that pushed down here to create that wick, and then pushing back up to close at 15. This is a live chart on TradingView, and typically you'll see price is being pushed up either up or down, and this countdown is just telling me that it's 3 minutes left to this. We're on the 5-minute time frame. That's this candle right now that's printing is a 5-minute candle. It has 2 minutes and 54 seconds left before the next 5-minute candle prints, right? You can see that it's priced opened up, since it's green, it opened up at a lower price, and then it's ending up, well, it hasn't closed yet, but the price of it is higher than what it opened up as, so that's why it's green, right? And as you see, price at the max, it pushed up to this top here where that value is 29,844. That's the max, and it creates that wick high. And then for it to push down, the lowest price for this period of time is 29,809.75, right? So it can continue to push down and just extend this wick even further. Vice versa with the top, it can push all the way up here and then extend that wick all the way up here. So the size of wick will just tell you how far has price pushed up or down in a certain direction, right? Now when you're looking at a candlestick graph here, it's essentially just buyers and sellers in the market pushing price in one direction or other. Now price can either go up, or price can be pushed up, or price can be pushed down, and that is what creates the wicks of the candles. And then the body of the candles is created by where has the price opened up and where has the price closed, right? What we're going to do is wait until there's about a minute left on this candlestick to form for this 5-minute candlestick. So you can see down at the bottom, it'll tell you right here, this is at 8:35, and then this candle formed at 8:40, and then the next candle will form at 8:45. So we have about 20 seconds left. So when the price opened up, it opened up at this level here. We'll see where it closes. If it closes lower than where it opened up, then it would form a red bearish candle. If it opened up or closes, sorry, if it closes higher than where it opened up originally, then it'll form a green candle. You see that after 5 minutes is over, it's formed the next candle here at this price point. So we're taking a look at a candlestick chart. You're just seeing essentially where price has been pushing up or down, and then your main goal as a trader is to figure out where is the best area to get in, whether if you're looking to place or be in a buy position or in a sell position. All right, and a candlestick chart is like reading a book. It's going to give you clues or tips or ideas as to where price will push up or down next in a certain area, right? So that's where traders will come up with price patterns and strategies based on what they've seen on the chart here, and I could go more into depth on that in another video. I'm just gonna briefly talk about price patterns and strategies. Typically when you look at a candlestick chart, there is some patterns going on. Is when you look at this for the first time, you're like, what's going on? But if you take a look at this area here, we just call this area of support. I'll go into detail later, but usually around this area here, there has been chances where people have gotten in here and bought and then sold all the way at the top here. They back down to this area, they bought here, price went up, kind of went back down but went up again, and then once again hit this area again and then push back up. So you can see where if you bought something in this area or this price and then sold it up here or up here, or let's say up here, that's where you make money there. So that's a pattern or strategy you could develop and I'll go into more detail later about my specific strategy here as well. But essentially, to make money in the market, you just got to figure out where's the best time or best place to buy, and then where's the best time or place to get out of the market to sell, or vice versa, to make the difference there and make money. There were a lot of sellers to push price all the way down here, but there were more buyers in the market for this 5-minute time frame to push price all the way back up to close higher than what it opened up at. All right, so if you see the wicks here, wicks are pretty much just essentially telling you that there's a battle between buyers and sellers. If you have something like this, it just shows you that price really, it pretty much opened up and closed at the same level here, but within that 5-minute time span, it moved this much here to the start candle. And some candles have larger movements, like this one over here, where it opened up here, but pushed down and pushed all the way back up here, and then back down here. All right, so that's the basics of candlesticks. It's pretty straightforward. So you sit in front of a candlestick chart and just watch this candle move where the price opened and closed at, and you could actually see the candle print in real time.